Hello and welcome to the look ahead for big tech earnings this week with me, Fiona Cincotta, Senior Market Analyst at City Index. So yes, this week is a big week as far as tech earnings are concerned. We've got January the 30th after the close numbers from Microsoft and Alphabet. On February the 1st after the close, we've got earnings from Apple, Amazon and Meta. And then tying up the Magnificent Seven earnings season, we've got Nvidia, who are due to report on February the 28th. Now, these earnings come as we're seeing this growing gap between the performance of the S&P 500 and the Magnificent Seven. The gap between the performance of these two parts of the index, if you like, is the largest it's been since the pandemic. And this is basically because we've been seeing this growing divergence between earnings growth between those stocks that we call the Magnificent Seven and the rest of the S&P 500 constituents. You can see here from this chart that, across 2023, there was a vast difference in earnings growth. In fact, the other constituents of the S&P 500 saw negative growth, whilst these Magnificent Seven continued to power higher. Now, there's going to be a really big focus. The market is going to want to see signs of the multi-billion-dollar investment that firms such as Microsoft, Meta, Alphabet, Amazon, Google, Apple have been making in AI are translating into financial gains. So I think there's going to be so much focus this quarter on AI and what's going on as far as those investments are concerned. Just taking a quick look here at Meta and Microsoft. Meta has had a phenomenal rally across 2023, the year of efficiency. They've cut costs. They've also seen a strong investment in AI startups and also R&D, AI R&D. They've share prices up 170% across the past year, well outperforming the S&P 500. So as I said, AI is going to be a massive theme for this stock. Also, China ad spending, as we see the likes of Shein and Temu looking to really grow their reach outside of China. Also, let's just keep in mind, this is an election year. So could we see Meta as a play for the elections? Now, EPS are expected to come in at $4.93 on revenues of $30.08 billion. That's up from EPS of 1.76 in this time last year on 32.16 billion in revenue. Just going to take a quick look here at the Meta chart. This is the weekly chart. We can see that extremely strong rally across 2023. It's taken out the pandemic high there. That was around the 385 level. It's powering up. It's trading at an all-time high as it heads towards 400. We're just below that at the moment. Beyond 400, buyers are going to be looking towards the 450 level. Immediate support can be seen at that 385 level. Now, also Microsoft has sort of, in line with Nvidia, has really become a stock that's been playing out the AI gains. It's risen to a $3 trillion market cap, taking the crown of the largest company from Apple, or it's vying for it at least. Shares are up around 70% so far this year. Again, this is very much to do with that relationship between Microsoft and OpenAI, the creators of ChatGPT. Also, we're seeing Microsoft really seem to be quite ahead of the game as far as AI is concerned, monetizing it through its Copilot, which has seen really strong uptake across Fortune 100 companies. Also, Azure, the cloud part of Microsoft, has been outperforming, posting stronger than expected growth in Q1. So, as far as outlook is concerned, very much going to be focused on what they're saying as far as AI developments are concerned. This is the Microsoft chart. Again, is trading within that rising channel, trading at all-time highs. Bulls are going to be looking for, it's just around the $400 mark at the moment. Bulls are going to be looking towards the 450. As far as support is concerned, I mean, the first support really, I think, is around that 350 level. If we get a break below there, then that will negate the near-term uptrend. Other things to keep in mind this week, as well as all these earnings, we've also got the Federal Reserve interest rate decision. The market is not expecting a move from the Federal Reserve in this January meeting. There's going to be a lot of focus on what's coming next, though. Now, the market, after a bout of stronger than expected data, strong resilience in the US economy, has reined in expectations of a March rate cut and now sees that as just under a 50-50 probability. So a lot of the focus is going to be on any clues that the Fed might give with regards to the outlook for the timetable for a Fed rate cut. The NASDAQ tech growth stocks are very sensitive to the interest rate outlook. We can see here this strong rally that we've had across the the last quarter of last year. This is the daily chart on the NASDAQ. It's rose to all-time highs, driven by the optimism that the next move by the Fed is going to be a rate cut, and also this AI story and narrative, which has been playing out in the tech stocks as well. It hit resistance at 17.7, just below 17,700 last week. That's going to be a level that the buyers are going to want to take out in order to power on towards fresh all-time highs and that 18,000 level. Just keep an eye out on that RSI. Did go into overbought territory at the end of last week. Appears to be just coming back below that overbought territory. Thank you very much for watching. I hope you like the video. If you do, then please do remember to give it a like. Also, do follow for more videos like this.